The missing link for last week's lesson, remember how I noticed that I had one rule missing for my system? And that was that I had the time windows missing, so I'm sorry about that. For longs it was anything after 8 PM, and for shorts it was a window between 8 PM and after 8 AM and before 10 PM. So please write that down if you don't have that. And that would explain the screenshot that I was showing last week. For those who are new, don't worry, it was last week's lesson. You will see that in about 3 months' time. Your homework for the week just been was fresh eyes. How did everyone go? Did you all build a system with an indicator you had seen in the past? And by going back over it a second time, you were amazed at the system you could build, and in fact you were able to build a system better than the previous time you looked at it. Well, I did just that. I did it with the MACD. I'm going to teach you a new indicator today, which I think you'll find a lot of fun. It wasn't easy for me to put this indicator even in the coaching, so please treat it with respect and keep it under your hat. And we'll go through the thought processes I went through in putting my system together. Before we get started, I just want to make one point about the markets, and I don't know how well you'll understand what I'm trying to explain. It's an advanced concept, but I've just seen it so much. Let's say Greg has, which he does at the moment, he's got 22 trading plans layered like lasagna. And my trading's to a point now where I just don't care about it. Now I mean that in a positive sense. I have trades triggering all the time, and some trades work and some don't. And generally it's risking about 4% of my account on any one trade. But because each particular system is running the probabilities as you would know, and it's about 70% or higher success with an equal sized profit or stop, or a variation thereof, each individual one should be running its own percent success. So let's say I'm putting an arrow at this one here, that might be a MACD system running at 70% success, so in its own right it should perform very well. But then I've got 22 doing that, and because of that it's got to the point where it's triggering all day and night, and when I am not around my computer, but it doesn't faze me at all anymore. I just watch the account grow and don't think anything of it. I'm numb to it, which I think is a brilliant point to get to with your trading. But I want to articulate a really interesting observation with that. Let's say on average we're running at 70% success, so we all understand that if we were to take 10 trades, 3 of them may not work. But because we've got lots of different trading plans, and over your 3-month of coaching I hope you've built at least 12, so you have 12 different trading plans, some that you like, some that you don't. Let's say you've got 6 that you really are proud of. Well, at any one time one of them might be suffering, but overall you would expect that the account would be growing, or that there'd always be something working at any one time. But what I've found is something a bit different to that, and it's because of how the market works. Let's just call this, I'm just going to do a little bar graph here. So this is 100% of the time that the market just bubbles along. And what I thought was, if I layered it, and I had so many layers, that at any one time it's not possible that everything could turn against you, because you've just got so many different layers working on so many different markets, on so many completely independent and different ideas. So there would never be a situation where all your trades wouldn't work. Correct? Is everyone with me so far on that? Yeah, that makes sense, Greg? Because you've spread yourself out. You've got probabilities on probabilities. So that makes sense. What I've found is there's probably, let's call it 7% of the time, and I'd say it's about that, where you've got, say, 93% of the time, that's exactly what happens. Your different strategies and your different trading plans, even if you're trading them manually, play the probabilities and work as expected. But there's 7% of the time when absolutely everything to do with your trading just flatly won't be working. And I guess there's probably 70% of the there's probably 7% of the time when absolutely everything you do turns to gold as well. But let me explain what I think this little tiny percentage is. If you get a rug in your lounge room and you pick it up at one end and you give it a good flick to get all the dust off it, the ripple goes right through the rug and to the other end and flicks it like a whip. Well, as you know, all the markets are so interconnected, it's not funny. So, for example, you'll know that the American dollar is just depreciating in value no end. The reason for that is it's a result of the actions they have taken to restore confidence to the market and lift things such as the S&P 500 and that. And if I can actually show you, I have the graph of the S&P 500 rising overlaid with the US dollar falling, and they're completely inverse to each other. Okay, mirror effect. So, and as you would know, because of that, things like the Australian dollar keep getting stronger, and or USD Japan go the direction they do, and it's because the markets are so interconnected. While one thing is happening, it's interlinked and affected to all the others. Well, consider this. It's like getting one end of the rug and just giving it a good shake and the ripple goes right through. Well, when the markets are hit with a jolt that they're just not ready for, it may have just been a jolt on particular news on one market, but it has that ripple effect and it just ripples right the way through. And it can ripple right the way through in a good way and hit all your things to where they're supposed to go, or it can be in a bad way and hit them all to a stop out. Now, is it in terms of in a single second or in a minute? No, I'm not talking about that. I'm saying it could be a day. So for example, you could have a month of trading, and each day of the month you have your wins, you have your losses, but overall all your trading plans operate as you expect. But there will be a day where everything just doesn't make sense, and for whatever reason, it's not in a minute or an hour that everything will just stop out, but that day is just a crook day, and the markets are lumpy all round, and for whatever reason, any of your trading plans or your systems, however they are working, will just be really average. And as you know, there are times when it's brilliant. So I just wanted you to prepare you for that. So if you're trading and then you just notice on a particular day, it didn't matter what you did, and you got so many plans and they're so solid and so wonderful, and you go back and you think, what is it about this plan? What have I done wrong? It's not that at all. It's the market breathing in. I think of it this way, as the market breathing in and out. And when it, I don't know which way you want to say it, but when it breathes in, everything's fine, but occasionally it just breathes out a bit, and that's like the shaking of the rug, and it just whips everything around. So look, it's an advanced, it's almost an academic discussion about it, but I did want to go there because for some of you, you're coming up to the end of your 3 months, and I know that would actually be of help to you. So was that a help to some of you and you found that interesting? So let's go to a chart and let's look at the latest system I have for you. And this is a system that came about from me applying fresh eyes to one system. The first thing I did is I looked at all the systems I have, and I thought, well, I don't need to go build another USD Japan because I've got loads of those type of systems. What type of system do I have very few of? And what I have very few of is GBP USD. And so I thought, okay, why do I have very few of them? It's because I do find it harder to write a trading plan on this market from that works from the start of 2007 all the way till now. I can write one that works in the last 6 months easy, last 9 months, the last 12 months easy, but to write something that has worked for the last, well, from start of 2007 till now is a challenge. And the reason it's a challenge is because GBP USD has done a lot in that time. It's had its up times, its down times, very big changes in its trend. And so you really have to apply yourself to be able to build a system with it. So I thought, okay, that's where I'm going to go. And the next thing I'm going to do is pull out the most obvious and boring indicator I can, which is MACD. And I'm going to do that now for you. You can follow along if you want. MACD on default settings. And I'll be looking for it to cross 0, as we saw in our game earlier today. So I'm going to put it on transparent and transparent for the two elements of the MACD that are useless to me for this exercise. But the MACD itself, which is actually one of the 3 elements, I'm going to turn to a size 3 line. I'm going to turn my 0 so I can see it. So I'm going to put it to a 2 and a black and apply that. Okay, now I'm interested with when the MACD is crossing the 0. Now straight off the bat, I won't spend any time talking about that because we all understand what's involved with that. Now this is the gold, and this is what I didn't find easy to add to the coaching. I hope you enjoy it. The TSF, Time Series Forecast, calculates probable future values of the price by fitting a linear regression line over a given number of price bars following that line forward into the future. A linear regression line is a straight line which is as close to all of the given price points as possible. Now I'm going to get that, and I'm going to put that at 3, and the period I'm going to put that on is 119. Okay, has everyone got that? The TSF at 119, and a width of 3 so that we can see that. Now, a common question I'm sure you've heard is, I wish I could tell when a trend has come to an end. Well, you also know linear regression lines and how they work, and they can even sort of look at the channels in which they're working. Well, this thing looks like a moving average, but it's actually working itself on trend lines, and more sophisticated than that, linear regression. So the maths behind it is very sophisticated and very cool. So for that reason, I hope you enjoy it, but I also hope you, please out of respect, keep it under your hat. So the simple way I would consider looking at it is to say, well, if the thing is rising, then I would say that I'm in an uptrend, and if the thing's falling, I'm in a downtrend. And the reason I'd say that is because this line is looking at a linear regression channels and drawing them and redrawing them all the time, and working out from the trend lines if it's rising or falling. I might actually see if I can find a linear regression channel just to show you what they look like. Here we go. So if I was to go from here to here, just watch it as I move it, and watch it recalculating and moving itself apart and looking at lots of different things. Okay, I'm not just dragging that and showing anyway, it's choosing where to draw itself. And as I go here, it goes wider. Okay, so it's a cool piece of gear in its own right, but normally a trader would manually draw it on, and even then it's a bit of an art and you've got to know where to draw it. So to have an indicator that does it for you is extremely cool. Okay, so now if we could just go back to bare basics and we say, alright, when price is cutting above or below the 0 line on the MACD, I'll go long or short. I'll do that, however, I just need my little drum kit, tish boom, if I have linear regression, or the trend line, or the trend supporting where I'm going. Now I'm looking at trend at the last 119 candles. And if I have both, then yes, I will. So right on screen where my cursor is, no, I wouldn't right there. This one here, I'd actually have to get to zoom in the cursor box and see if they're actually both pointing up or pointing down. Now I've done that for you on this screen. Okay, so at the time of entry, the MACD had crossed to 0, and relative to the previous candle, the TSF was also pointing down or decreasing at that point. It had just started to, and down it moved. So I was happy to take that one for a short. This one here for a long, going long like that. You can see that on the MACD it's crossed above the 0, and the TSF is rising. So therefore we would go long. We've got two opportunities to go short. One worked. The other one, the the position was closed and reversed because a signal the opposite way came into play. So here, for example, is where we wouldn't use it. So you can see on my cursor line dropping down, MACD is crossing down below 0. So we'd say it's an opportunity to go short. But my measurement of the trend over the last 119 candles is that it's rising. So no opportunity there at all. Okay, this one here is ideal. MACD crossing 0. Can't get any more elementary than that. My TSF is looking at linear regression and saying the trend overall is in fact falling as well, so yes, you can do that. If I look to my left, MACD crossing 0, great opportunity to go long. Candles are lifting, everything's looking very exciting, but the long-term trend doesn't add up. So there's obviously no signal there. So 6 in the morning there. MACD was above the 0 for a little bit and then dropped back down, and the TSF was decreasing or pointing down or sloping down, so it was acceptable, so it was an opportunity to go short. So who thinks they're going to have a lot of fun with this newfound indicator? Believe me, it's a lot of fun to put in your sandbox and muck around with. Now I'll show you some of the settings I use with it. Okay, Adrian says, what are your entry and exit targets? I'll show you that just now. Okay, this system is a market move system because it's on hourly, but I'd call it a very messy one, and you'll see why when you see the profit line. It's balanced in that we do have longs and shorts. There's the settings for the indicator, MACD on default, TSF on 119. The rules are that MACD crossing 0 and TSF pointing in the correct and logical direction as well. So down for a sell and up for a buy. Now I chose to teach you this system today not because it's got a particularly high percent success. Relatively speaking, the percent success is the same as a 70% success system on equal profit and stop. Okay, but my profits and stops are different sizes. But I think there's some really important lessons to learn from this system, so that's why I chose to teach you this one today. For longs, I've got 141 pip profit, 87 pip stop. So everybody gives a little golf clap and says, very good, bigger profit than stop, and about the right size for a decent market move. For shorts, I'm going to get a frown and a bit of a grumble. A 53 pip profit, pip stop. Okay, boo hiss, that's not the thing to do with your trading. Sure it's not. But have you considered that if you add all the profits and stops together and divide them by 4, you'll see what the average is, and you'll see overall with all my trading that with all the wins and losses, it averages out to, relatively speaking, an equal size profit and stop. And it's also balanced with the bias direction. So obviously the bias direction is slightly better to the upside. Okay, obviously overall, if you were just to blindfold yourself and throw a dart at it, you'd want to be throwing long darts because the longs seem to work better. But the shorts, when there is a signal opportunity, is still quite good and obviously worth taking. And what's even more interesting is when you crunch some numbers to see is it the longs or the shorts that's more profitable at the end of the day. I mean, it's very nice that the longs have a bigger profit to stop, but which actually brings home the bacon. So from the start of 2007 till now, it's a good sample size. 62% success. Let's check it out. And do remind me to come back to your homework. Firstly, I think everyone is familiar now with what we're looking for. We're looking for the MACD line, which is the green one, to be crossing the 0, as it is through here. And when it does, we want the TSF to be rising, so that's an opportunity to go long. And remember, in the case of longs, our profit target is quite a bit bigger than our stop, and vice versa for shorts. Let's examine the numbers. Well, before we do, that's the profit line. It's probably one of the most profitable I've shown you, in that it has, even if you were to start with a $300 trading account down here, it didn't have any drawbacks against that. You can see it just often lifted away, and it's up over $6,000. So percentage wise, it's quite brilliant. What's also interesting is, remember I said GBP USD has done everything. It's trended every which way. It's had every type of bias. It's gone through everything you can imagine, and to build a system that's consistently working long and short is quite something, if you can do it. And I wanted to give myself that challenge. And as you can see, it's lifting up through there quite well. You can see there was quite a strong hit recently, and I imagine that would be because of, remember I said I had the quite large stop loss on the shorts, balanced out by the quite large profit target on the longs. Okay, so we've got 289 trades overall. We've got a maximum consistent losers of 5, which is not healthy. We like to have a maximum of 3. We think a trading system with more than 3 is a little bit, it's too much emotion to deal with. Now, first thing we look at is percent success of the longs and the shorts. The shorts here we can see we're running at 73% success, so well done, brilliant, that comes in on par. Maximum stop outs in a row 2, well done, very good. So it's all the things we would like to see. But then you need to look at how much it's making per trade. I've just got to find that myself. Okay, yeah, this gets very interesting. So it meets all the criteria for the conventional statistics, but then you have a look at how much you're making per trade. You're making $16 on average per trade. Okay, so sometimes if our profit target is hit, we make $53. If our stop loss is hit, we lose, on average, we lose $85. Okay, but how we think of it is, if we had taken 154 of them, the average is $16 a trade. Now, as a rule of thumb, sorry, I'll just answer one question here. Hi Greg, does this system only work on GBP USD? Connie, the particular sized profit and stop are designed for GBP USD, but the idea of MACD and TSF should and will work on anything, but you're going to have to decide what is the most relevant profit and stop. Okay, if you're trying this on daily, for example, on an E-mini market, then yeah, obviously a different size profit and stop. So here we can see, yes, very good, 73% success, yes, very good, maximum 2 stop outs in a row, 154 trades, okay, that's a nice sample size. But on average, and yes, okay, the profit target is smaller and the stop loss is bigger, but on average it's returning $16 a trade. Now I've learned by building enough systems that if it's not returning at least $30 a trade, it's not really worth looking at. Now if you have a look at the longs, you'd say your trading system is running at 48% success. Oh, dreadful. Not nice at all. Maximum consistent losers in a row, 7. Okay, that's an absolute horror. Our average winner though is $132, which is really good. Our average loss is $68, which is quite manageable. Okay, but overall our average, I mean, if you took 135 trades and averaged it out and worked out for each trade what's actually coming into the bank, it works out to be about $30. Now when you're designing a trading plan, you want to check, is it on average at least with my whole trading sample size, like you might just backtest yours over 6 or 9 months, and just work out, say, for $1 a pip, is it returning at least $30 a trade? Because if it's anything less than that, it's not really worth doing. And so, because this one returns $30 a trade, I could look at that and I could say 47% success or 48% success, dreadful. Maximum stop-outs in a row, that is bad, and you would have to actually have a look at that before you were to use it. But overall, it really does perform well. This is another thing you need to look at, is total amount gained was $8,700. So if we didn't have a loss in our account, we would have, just from the longs, $8,700. And then if we include losses, there's about $4,400, which leaves us $3,994, or about $4,000. So we're making about $8,000, losing about $4,000, and it's leaving us with $4,000 in the pocket, which is a good ratio. That's an absolutely healthy system right there. Okay, and the shorts, they're coming in. It's a pretty healthy ratio, but it's not so good. Okay, we're making almost $6,000. We're giving away 3.5, so it's leaving us with 2.5, as you can see up the top. But anyway, that's crunching the numbers, and overall this one's returning 6.5 and 62% success. But I wanted you just to learn some of the finer points of system design. And the reason I mention that is because some of you are in the last days of your coaching, and these things really are important to you. Now, the fresh eye lesson is, when your trading's not going so well, learning more is not always the answer. This week you all re-looked at a previous system that you thought, been there, done that, and hopefully, I hope you're actually able to build a better system than ever before with it. A system you wouldn't have had at all unless I said go back and revisit it. And I also said that I'm always pleased to hear from some pro traders that I check base with, and they say, if they've been having a rough time, they say, you know what, I was tempted to go learn more in whatever fashion you want, books or courses or just reading up on an article on the net, but they said, no, I resisted the urge. I took stake in everything I already currently know about the markets and just fine-tuned and polished my current skills, and then I was up and away again. And the sub-lesson I want you to learn is, there's just a time when a ripple goes right through the whole market, and it doesn't matter what you're doing, it's going to upset you. It's a very small % of the time, but by being aware of it, it means that when you're hit like that, it might be only once a month, that you don't go through all your trading plans and think, how can I perfect them, how can I make them better, how could I have adjusted my profit and stopped to accommodate this happening. You just need to appreciate that the rug just got a good shakeout and you happen to be in the market at the time, and frankly tough. So with that, if you take away nothing else, I do want you to take away this TSF, the idea that a linear regression line has been turned into what looks like an MA, but just a very simple indicator there. And with a bit of nous, you can actually build some very exciting systems. Now, some homework for those who are going on with this, and for those of you who you're finishing up now, you will actually smile because you'll see, that was a long time ago, I remember doing that. Your homework is to build a system with R3 and S3, the pivots. Now the pivots are discussed in the workshop and also the e-course, so you should have no trouble bringing them up. And I want you to load your pivots up and build a trading system around those two indicators. Next week what I will do with you is ask you, have you built your system? Hopefully you have. That's how you get the most out of your coaching. And then I'll show you a system I've built. And what you'll hopefully do is you'll say, wow, I still like what I've built, but I'm going to take elements from what Greg was talking about and apply that, and that's going to massively enhance what I've done. Adrian says, any particular instrument you recommend? If you're interested in the minis, the ES is very easy to do it with, or any particular FX pair that you like working with. If you're on a particular FX pair and you just can't see anything that interests you, just move on to another one and start checking that one out. Okay, well thank you traders, that's it from me, it's been a pleasure.